Armily Inc., World 11, Team 1. Who is Armily Inc.? Manufacturer of quality shoes. The executive team consists of Jasmine, who is the CEO, Maria, who is COO, Linda, who is CFO, Gerson, VP of Marketing, Arsene, VP of R&D, Mehedi, VP of Finance, and Telma, VP of Sales. The overall strategy at Armily Inc. is that we employ the best cost provider strategy. We want to give the customer more value for their money. In doing so, we believe Armily Inc. can achieve and retain a large number of customers, therefore increasing our sales. The mission statement is to provide shoe enthusiasts with high standards of perfection, with exemplary service and products we trust and believe in.
Hi, my name is Linda, and I will be talking about the performance targets. Here we have a graph of the chart of the return on asset, return on equity, market share, stock price, unit production cost, and total net income. The top three, return on asset, return on equity, and market share, are the top focus that we have for our company. And we all three have reached their target or higher. And as for stock price, it wasn't our main concern, therefore we didn't focus too much on whether it was high or low. The unit production cost was also not our main focus, but we were able to keep it at a low cost. As for total net income, we estimated the target, and therefore we have a high actual result, which is showing that we are doing a really good job for our company. As here's just a chart and a graph of the ROE and ROA, stock price and market share, the unit production cost, and total net income. To kind of show you a comparison of how we did against our competitor in the industry, here is a table of the year 5 peer comparison and year 6 peer comparison. And as you can see, for our company 1, we were above the industry average, and as you can see, the top 3, return on asset and return on equity and market share, we were above average, and we did a good job against the other companies. Unit production costs, we were able to still maintain a very low number against all our companies. Stock prices, as I mentioned earlier, not our main focus, but as you can, so therefore we didn't really care too much about it. And as total net income, we were above average, but not the highest one, but we are still doing a good job. So here's just a couple graphs showing how well we did for the 2 years. Also for the stock, you can see for the stocks, we didn't care too much about it. We didn't do too well, but it's not our main concern. Total net income, we can see that we did a good job for year 5, whereas year 6 we didn't do so well, but we were still doing better than the other companies.
My name is Gerson, and I'm going to talk about the analysis of functional strategy. Our marketing strategy was to increase advertising in each of the areas, steadily increase price by monitoring the rivals. Our operational was to increase product sales, invest more in R&D, and invest more in training employees. Our financial was to take out loan for expansion, issue bonds, and issue stock. Armily Inc. is proud to be a company with an outstanding sales team that is efficient and produces results. Our strategy included a cautious approach to always keep a good number of salespeople in each of the regions, depending on the fluctuation on the expected sales. If sales and inventory were high, we would increase the number of salespeople per region. Our plan included to hire a new employee in each of the Americas and Sereno during the first quarter of year 5 and 6. During year 6, Armily's strategy remained the same. Armily did not transfer any of its employees in years 5 and 6, and no expenses were reported. Armily Inc. did not fire people, and were not severance expenses reported. In regards to salaries and commissions, Armily Inc. is always interested in rewarding its employees by raising salaries annually and increasing commission rates every 2 quarters. Our plan consisted in raising salary levels in the beginning of year 5 and 6 and commissions every quarter. During year 6, salary levels were planned as we were planning, and they remained the same, and we slightly raised the commissions every quarter. Our salary, commissions, and expenses remain almost as predicted. Our projection in both areas were underestimated. We believe that this is due to a cautious approach strategy that we have. In regards to product, Armily Inc. implemented a similar strategy to keep the prices stable until a new model was introduced. Our prices in year 5 were increased by 1%. Armily's approach was to adjust prices according to our competitors' prices to preserve a good market share. During year 6, Armily's strategy remained the same. Our reason to this decision was based on a lower price and a steadily increase in price to create new sales and faithful customers. Advertising, the strategy of Armily Inc. was to increase advertisement by 3% every quarter. Armily Inc. Believes that in order to create sales and revenue, good and smart advertising is essential. Our strategy was based on a steady growth of about 3% on increased advertisement, and it was proven in year 6 that our strategy of increasing advertising with a steady growth of 3% was working. Our sales were greater than expected, even when our advertising spending was underestimated in all areas, including Serena.
I'm Arsena. I'm talking about operation and product management. The actual amount of R&D spending were lower amount than our target that we discussed for year 5 and year 6 to achieve our company goal. As you see in the chart, for year 5 our goal was 443, but in actual we spent 437. And also for year 6, the goal for total R&D was 537, but again in actual we spent 498, which is less amount than our target to achieve our goal for our company. Training and cost saving levels. We measured to increase in our expenses training for year 5 and year 6 in our 2-year plan. Therefore, we spend more amount in actual than we discussed for our company goal in total training expenses. In a chart, you can see the difference between year 5 and year 6, the targets and the actual amount that we spend. Total beginning inventory and total storage expenses. Since in previous year we did not have enough inventory in our company, so for inventory we lost a lot of customers, so we spent huge amount in total storage expenses to make sure that we would always have enough inventory to keep our customers satisfied. In a chart that you can see, it's a huge difference between target and actual, which has helped us to keep our customers satisfied. For production lines and outputs, we found out we do not need second shift lines because first shift line was achieved producing the expected units. And total units shipped and total transportation cost. Based on sales increase in year 5 and year 6, we spend more amount in total units shipped and total transportation costs. Because of the high volume of sales, we spend more amount on total units shipped to sales office and customers.
This is Thelma, and I'm going over the income statement and cash flow variances. In year 6, Armily forecasted gross profit for $8,112,000, which the actual amount was $14,907,000. The company gross profit ending up having a favorable variance of $6,795,000, which was 84% increase from our forecast amount. This result comes from the fact that we sold more unit at higher price than forecasted, and as a result, we end up generating better revenue. In year 6, our general and admin expense was forecasted for $3,936,000, and our actual amount was ended up with $2,162,000. Which was 45% favorable variance, and this is because the number of the employee that we train and hire was lower than the expected amount. In year 6, we expected to have lost for $1,739,000, while the actual net income was $3,672,000. As a result, we end up having favorable variance for $5,411,000, which was 311% increase from our forecast amount. Armry's income was more than expected and expense was lower than forecasted. As a result, it caused unfavorable variance in income tax liabilities. In year 6, we had a better standing cash flow statement because account collected actual amount was much higher than forecasted, and it ended up having 155% favorable variance. Beginning cash balance was also influenced by account collected and ended up with 244% favorable variance. As a result, our ending cash balance for year 6 come up with 325% favorable variance.
I am Magadi. I am going over balance sheet variances. In balance sheet variances, we have cash, account receivable, inventory, and accumulated foreign currency adjustment. Our sales for year 6 was much higher than our expectation, which is the main reason for Armily Inc.'s high variances. Our actual cash balance was $20,649 and our estimated amount was $5,455. The increase in sales caused the majority of this favorable variance. Because of the same fact, there was a significant difference between actual and forecast balance for account receivable. Actual demand for our product was higher than our prediction, and it caused this 255% unfavorable variance for inventory. Because cash and account receivable had such a large increase, they offset the decrease in the inventory. And the last variance is accumulated foreign currency adjustment. In 2-year plan, we assumed that Syrian peso would have slight changes based on the previous currency trends, but in reality, the exchange rate was much higher, and it caused this unfavorable variance.
My name is Jasmine, and I will be talking about the decision-making process. In this section, you will find the steps that Armily Inc. took to be successful in these last couple of years. So our decisions on production were made by using a combination of a model regression and by analyzing current inventory levels and company sales. We increased marketing revenue when we saw company sales were lacking in a certain area. We increased marketing in all areas, but focused more on struggling sales. For example, in America 3, our sales were lacking and we put more money into the marketing area there and our sales increased. One of our objectives were to increase ROE, and to reach that goal we issued stocks and bonds, and we also took out a loan to expand. I'm also going to be talking about companies and the SWOT analysis. Our strengths, as you can see, we had a high volume of sales, which increased sales revenue and contributed to our next strength, which is a large market share. Our weaknesses were that we had a stock out at the end of year 3 and beginning of year 4, which made us lose sales and customers. That was due to a low production capacity, which is also weakness. Our high demand is leading to a stock out. Our opportunities are that we have the opportunity to expand since we have a large demand for our product. We can also open new lines and possibly a new plant in Sereno. We also have opportunities for new models with new qualities and features by investing heavily in R&D. Some of our threats are that we have rivals, and our threats do lie with our rivals. Rivals who employ low-cost production costs can retain a large portion of the market share and also sales. Another threat is that our competitors are much faster than us in innovation, therefore they are able to get new models faster than we are.
My name is Maria, and I will be discussing the future plans and the conclusion. For year 7, Armily Inc. is projecting to price its merchandise at $12 in the beginning of the first quarter, with a continuous increase of 1% per quarter in each America. In Sereno, the results of price were underestimated, leading a unanimous decision by the board to proceed with a more aggressive projected price of $150 by end of year 7, quarter 4. To remain ahead of competition and make our products well known worldwide, Armily Inc. will continue to focus on advertising by maintaining a steady 4% increase. Although it was a difficult decision, at this time Armily Inc. has decided to place a hiring freeze in each Americas. Rather, we will focus on retaining our current talent and incentivize them with incentive goals that will align with their performance evaluation. The percentage increase will range between 1% to 3%. Armily Inc. will revisit the hiring freeze at the end of year 7, quarter 4. In year 7, quarter 1, Armily Inc. plans to request a construction loan to build a new plant in Sereno. We plan to break ground on year 8, quarter 1. Armily Inc. recognizes the importance of paying dividends to its stockholders. By year 7, dividends will total $120,000 or $400,000 per quarter. R&D is another important factor for the growth and development of Armily Inc., which is why we plan to increase costs by 5% every quarter. Another important factor to the success of Armily Inc. is continued investment in training services for its staff. Given the information provided, we see that Armily Inc. experienced growth and development throughout the last few years, but we recognize had all of our corporate managers been more involved with the decision process, Armily Inc. could have taken a more aggressive approach. Due to time constraints, decisions had to be made in a short amount of time. Nonetheless, we feel satisfied with the overall results. As we look towards future investments, we see huge advantages in the development of a new product which we hope to build in our new plant in Sereno in year 8, quarter 1. The introduction of a new model will give Armily Inc. a competitive advantage over its competitors.
So now that we have reached the end of this venture at Armily Inc., we want to talk about the lessons that we learned. One of the lessons that we learned was to not be afraid to expand. At the beginning of the game, we were afraid to expand, which then led us to a stock out. If we had expanded at the beginning, we would have not experienced that. Another lesson is to know how to play the game. At the beginning, it was a little difficult because the rules were a little hazy. So if we were to play the game again, one of the things we would do is to heavily invest some time into the manual and learn the ins and outs of this game. Another lesson that we learned was to work as a team. It is very important. It's a very time-consuming game. We have to put a lot of work and effort into it. So working as a team will help create a better atmosphere in the company. And also to avoid a stock out because it does lead to less sales and less customers. But overall, those are the lessons that we learned, and this is the end of our presentation here at Armily Inc. Thank you.